Hello, welcome to the European Open briefing for Monday, June the 12th. I'm Rafi Bajajan, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So it is a rather quiet start to the week, although it is going to be quite a busy time for the next few days, as we've got several central bank meetings coming up, including the Fed, the Bank of Japan, and the Bank of England, as well as some important data releases. But today's main movements are, of course, political related. We had the UK election last Thursday, and we had French parliamentary elections over the weekend. Of course, the dollar is in focus as we've got the FOMC meeting coming up on Wednesday. So let's start with the pound here. We can see in the chart that the pound has steadied since Friday, when we had that shock result where the Conservative Party lost their majority in Parliament, and the whole reason why Theresa May called the snap election in the first place was on expectations that she would be able to increase her majority given her strong rating in the opinion polls, but it turned out to be a disastrous election campaign for Theresa May, and we saw the pound slipping to 7-month lows on Friday before rebounding a little bit. It's at the moment it's steady around $1.2740. So there is some relief that the Conservative Party will be, at least from what we know so far, will be able to reach some sort of an agreement with the Democratic Unionist Party. That's a small party from Northern Ireland, which together they would be able to have just about majority they need in order to pass through major legislation. From what we know so far, it looks like they will sign up to a confidence and supply agreement where the DUP will back key votes in Parliament, such as the budget and Queen's speech and so on. But for the rest of the votes, it's going to be like vote by vote basis. So that could potentially create uncertainty as Theresa May will be able to she will basically need to reach agreement or consensus with other parties on other issues, and she may even lose some votes on several issues, and that's tricky given the fact that we've got Brexit negotiations expected to start next Monday, but for now investors see little change in the Brexit outlook and the economic outlook for the UK, so that's why the pound has steadied for now. Although, of course, there's speculation that Theresa May will probably face a leadership challenge within the next few months, and that could potentially lead to fresh elections. But let's move on to the US dollar now, because we have, of course, the FOMC meeting. The two-day meeting for the Fed starts tomorrow. It will conclude on Wednesday, where the markets are expecting a 25 basis points increase in the federal funds rate. So given that that's pretty much been priced in by the Fed funds futures, the focus will be on what FOMC members will be projecting for the rate path at the latest economic projections that will be published alongside the Fed's decision on Wednesday. If it looks like the FOMC members are becoming a bit more cautious, given the fact that we've had rather soft data recently out of the US, not just for growth but also inflationary pressures are appearing to be easing off, that would be negative for the dollar. But for the time being, we are seeing a bit of a recovery in 10-year US Treasury yields, and that's helping the dollar. That's supporting the dollar, although the dollar is down from Friday's high. It's currently trading around 110 yen. We also had, of course, for the dollar that small relief rally where following James Comey's, the former FBI director's testimony in Congress, there was little immediate fallout for President Trump, but of course the situation could still escalate, but for now markets are appearing to be ignoring that. A quick look at the euro now, because we did have French election results on Sunday, in the legislative elections. That was the first round. We've got the second round coming up on next Sunday on June the 18th. Macron's party, even though Macron's party was just founded over a year ago and they currently have no seats in parliament, they are on track to gain 445 out of the 577 seats. That would give him a very big majority, and it would also make it possible easily for him to pass through major reforms. But of course, now that all that political uncertainty in Europe is out of the way, and given the fact that the French, German elections, which are to take place on September, it looks like Merkel is on track to win a fourth term there as well. So that's sharply eased off the political uncertainty. So the focus will be pretty much on the European Central Bank, which last week at its meeting appeared in no rush to tighten policy, and that's why we're seeing the euro a little bit under pressure. It's just about managing to hold to the $1.12 level, having just reclaimed it earlier in Asian trading. Let's have a look at the Aussie and the Kiwi now, because both currencies did rally sharply last week. The Kiwi hit a 3.5 months high of 0.7272 against the US dollar. The Aussie hit a 6-week high of 0.7566. The Kiwi, I suppose that's mostly profit taking, given the strong gains and given the fact that we've got GDP data coming up out of New Zealand this week. The main reason for the Kiwi's rally is the strong outlook for the New Zealand that's been taking shape over the past few weeks. On the Kiwi, so the Australian dollar has been rallying mainly partly due to dollar weakness, partly due to a confident RBA, but this morning the Kiwi is one of the worst performers. We had a pretty quiet day in terms of data. We just had Japanese machinery orders out this morning. They fell much worse than expected in April. They were down 3.1% month on month versus expectations of a smaller 1.3% drop. But it's going to be a very busy week. We've got key data out of Germany, China, and the UK, as well as the US. UK and US will see inflation and retail sales numbers. Of course, we've got, as mentioned, the New Zealand GDP. We also have Australian employment numbers. But the big focus will be on central banks. We've got the Fed on Wednesday. We've got the Bank of England on Thursday, as well as the Bank of Japan on Thursday as well. That's it from me. Thank you very much for watching and have a great day.